What's up everyone? I hope that you're doing well. I want to welcome you into my first ever YouTube educational video. And today we are gonna talk about market profiles, the roadmap to how price delivers. Most traders think that having a bias alone is enough. But the truth is, if you apply your bias at the wrong time, it will make you lose money. Even a perfect bias fails without context. For instance, you see this example where price has been going steadily higher, using PD arrays as support to push it higher, only for it to then turn on you and produce a nice low resistance liquidity run against you. Today, I'll show you how delivery and market profiles help you spot when a bullish bias actually makes sense and when it's just a trap. To understand timing, you need a roadmap, a way to see how price delivers through time. That's where market profiles come in. Market profiles are a roadmap that describe how price delivers throughout time. They break down the market into distinct phases that repeat across all time frames, from daily sessions to weekly sessions, allowing traders to anticipate how and when price will expand, retrace, or reverse. Price doesn't move randomly. It follows a cyclical sequence: accumulation, manipulation, and distribution. Each part of that cycle is a profile, a snapshot of where the market is in its delivery process. First, it is accumulation, where liquidity gets built. Secondly, we have manipulation, when stops are run and we position for the real move. And finally, we have distribution, where the expansion phase we aim to trade. The beauty about market profiles is that they are fractal. The same logic repeats on every scale: weekly, daily, and even intraday. Each cycle is just a smaller version of the same story. Recognizing where you are in that story, both on the higher time frame and on the lower time frames, is what turns bias into true context. For instance, in this example, you see a perfect open high low close schematic on a weekly chart, and if you zoom in into that weekly swing high, you will also see an open high low close into the daily chart. If you have been paying attention, you will actually see that if you zoom in on the swing high on the daily chart, you will notice a open high low close also on the intraday charts. Many traders either ignore market profiles completely, or they make the opposite mistake, which is forcing their profile onto the markets. In reality, I believe that every trading protocol should start from the higher time frame narrative. So basically, where is price heading towards? What liquidity is being targeted? And finally, what is our POI? When we have these three components, we have established a narrative, and after that we can bring market profiles in to refine the timing. For example, if price opens low, trades into our POI, then expand higher and it closes, we only know that a certain number of profiles will fit that structure. If none of them do, that's a signal to stay alert, because the market might be writing a new narrative. So don't build your bias around a profile, actually build your profile around a narrative. That's how you trade with time and not against it. To finish off today's lecture, I want to show you 3 examples of market profiles in play. These examples happened throughout the course of the last week and are actually 3 back-to-back days where knowing the market profile theory would have allowed you to get those beautiful low resistance liquidity runs. I want to start with this first example and with this question, which is who has been making money? And I want you to always ask this question before entering any trade, and you will see why in just a second. Let's analyze what has been going on within this day. First off, we see Asia open high and then produce a big distribution lower, which is usually what we don't want to see in a high probability day, because we want Asia to consolidate and create liquidity on both sides of the market. On top of that, we see London open low, slowly grinding lower, for then 9:30 to open and still continue lower. Now, even if our bias says that we are bearish, do you see that a perfect bearish day would have opened high, low, close? Meanwhile, there is no profile that currently fits what has been going on in the market right now. Also, remember the question that you should always ask yourself: who has been making money? And the answer is that from the start of the day, only sellers have been making money. So now it's time for buyers to start making money. So at 9:30, price opens up, shoots lower, we raid the London low, and we revert back to the London high, going back inside the range and reaching the midnight open. The second example actually happens the day immediately after the first example, but we see the inverse situation happening. We see price during Asia slowly grinding higher. On top of that, again, London opens and continues higher. And AM at 9:30, we open low, raid the previous 90-minute cycle low, producing a nice buying opportunity. But do you see that since we have been pushing higher, higher, higher throughout the whole day, we are so much in premium that this buying opportunity is very short-lived? What ends up happening is that as soon as we reach one of our potential draws on liquidity, we will see the same reversal sequence that happens over here, but actually against us, and will produce a nice low resistance liquidity run to the downside, finally reaching the Asia low. The third example actually happens the day after example number 2, and it's basically again the same theory over and over again. In this time, we see Asia consolidating, London slowly grinding higher, AM1 again at 9:30, we continue to consolidate only for 10 AM to open low, produce a buy side opportunity. But do you see again how this opportunity is very short-lived? Because an ideal bullish day would have opened low, high, close. Meanwhile, right now we are so much in premium in comparison to the midnight open, and we are not following any market profile, that price opens, goes higher, we manipulate above the previous daily high just to reverse back to the previous daily low. Every trader wants to know what's next, but the truth is the market already tells you what's next every single day in the same sequence. Your job is just to recognize the profile and trade in sync with it. That's how you align your bias with time, and that's what real precision looks like. I only scratched the surface here when we talk about market profiles and how we use them, but there is a whole world of profiles, each with its own logic and purpose. If you want me to go deeper into those and break down how each profile actually delivers price, let me know. I would love to make that the next video. Until next time, be safe.